Welcome to our launch event for the Invest Minneapolis-St. Paul report. You're about to watch our first panel on banking and finance. Money matters. Enjoy.
Well, thank you all for joining us, especially Dan, Brian, and Damon. I'm excited to lead this panel because I think as you think about the values in banking, especially in the context of the community we have here in Minneapolis-St. Paul, what we've heard this morning, it's incredibly important and contributes or will contribute to the vibrancy that we have on our communities. As we kind of kick things off, obviously I'll have you introduce yourself as you go through this first question so the audience can get a real understanding of who we have here. But it's kind of a challenge to start talking about banking, financial institutions without acknowledging some of the instability that's happened over the last couple of months. And I don't think we need to rehash what led to that instability. Rather, I think for purposes of what we're talking about today, is it possible to contextualize a little bit of what happened, maybe more importantly, think about what the impact or downstream impacts would be to financial institutions that are super focused, hyper focused on community and development. Dan, would you mind starting?
No, I'd be happy to. So hi, Dan Stoltz with Spire Credit Union. I've been with Spire now for 24 years. The last 13 years CEO, so I came in 2010. So honored and privileged to be here. Thank you, Invest, for having me in the panel. I think that we'll talk about the present in a little bit, but I think you have to look back at these last 4 years. Unprecedented. We're going to be writing lots of research, lots of things that we have never ever seen in our businesses and in banking. In 2020 and 21, COVID hits, and as bankers, we really didn't know what was going to happen. And the unthinkable happened. Our assets grew, our cash grew multiple. Spire grew 50%. We grew close to $1 billion in those 2 years. And all of a sudden, but we couldn't lend it out. So 2021, we saw this huge asset increase for credit unions and community banks. Then we get to 2022, and people are feeling better about things. And then lending, we couldn't stop lending mortgages. And then remember that the mortgage rate's at 2.75 for 30 years. I've told my 3 kids, you're never, ever going to see that in your lifetime. I mean, some of my kids think that that's the normal mortgage rate. Today, it's closer to 7%. And it's closer to 6-7% is closest to normal. So we had 2.75% mortgages. We had used autos that people would buy one day because of chip shortages and things like that. Those used autos were worth more after they bought it. I mean, that's unprecedented. Real estate, we sold with premiums, multiple showings. Sometimes it was one showing at night and they had 10 bids. No inspections. Again, never happens. Well, I believe that. I'll never see that in my lifetime. So this was a really unusual period. And now here we are in 2023, and the uncertainty and volatility is very strong. It was about a year ago when the Federal Reserve started raising incrementally interest rates. And we thought that maybe we hit the peak interest rates just like 3 weeks ago. Now there's talks, and most people think that interest rates will see another increase come mid-June. So there's this volatility, uncertainty, but value-based organizations, value-based banking with my panelists here, this is our time, and I'll talk about that. And Minnesota is a great economy. We're well diversified. We have great multiple economies, and I'll talk a little bit about that. But I'm really excited about the future and where we can play as a part of that.
Yeah, Brian Topp, Chief Revenue Officer at Sunrise Banks. Been with the bank about 15 years, 4 locations in St. Paul and Minneapolis, 2 each. Thanks for having me on the panel. I think Dan said it well. You know, even if you look back to the housing crisis, the stability of the Midwest, even though we had our challenges compared to the coast, we were pretty stable. And I think that's what we're seeing even now with the banking crisis. There's a stability here where there's relationships and there's sort of decision making that is very diversified. The industries are diversified, the deposits, the lending is all diversified, and that just helps with that stability. So I think that as we go forward here, I don't actually expect many downstream impacts to the local banking scene because we have so many banks, we have so many different types of companies here. And even though the rates are up and people are questioning that, they actually are more to historical norms, as Dan said. So as we all adjust to that, even though it happened rapidly, I think things will start to even out.
Good morning, Damon Jenkins, Regional Market President for First Independence Bank. If you don't know much about First Independence Bank, it's one of the positive outcomes of the George Floyd's murder and riots. And as far as I'm concerned, I feel like we're built for this. just because we, brought the bank here to the Twin Cities during the pandemic, two pandemics. We opened up our first location a year ago, and to give you a little backdrop on it, First Independence Bank was started in Detroit as a result of the '67 Detroit riots. And if you know anything about that, it stemmed from police brutality, but a lot of the social inequalities and things that unfortunately 53 years later, we're still seeing play out here. And so during the aftermath of George Floyd's murder, 5 banks got together. We briefed Further Bank of America, Huntington, TCF, and Huntington, formerly TCF, US Bank, and Wells Fargo. And they supported bringing the first Black-owned bank here to the state of Minnesota. So it's a pride point, and it shows the importance and the strength of minority deposit institutions, some of the smaller community banks. You know, again, Minnesota, we're resilient. It's a lot of innovation. Our consumers, our business leaders are very smart. And so as you think about all the waves and turmoils that we've been through, I would even argue the last 15 years, we have been able to absorb that. I would challenge better than some of the other markets. And so I'm excited about what's to come, especially because you see that banks and financial sectors are really thinking about how do we work together, take a non-traditional approach, and bring equitable access of resources to marginalized or communities that are underserved. I think if we continue to stay there and perfect our already good business practices, we will sustain this. You know, I'll share a brief story and short story short. So this past weekend, I was out in Minnetonka with my mom voting, and my mom turned 79, so she, for the life, won't get into a vote. She likes to fish off the bank because there's her security and her safety. So we finally talked her into getting on the boat. But we get out on the boat and we're just in the wake area. So just kind of cruising along. And of course, here comes some young kids on their jet skis. And they don't follow the rules. And so they come flying through there. And what did they do? They disrupted our flow, right? They sent waves and it impacted us. And so when I think about that, and my mom's response was, take me back to the bank. And so when I think about the banking sector, right, you know, for the last few years, we have been moving along, cruising, and then a few months ago, there was someone that came through that was driving too fast, and the decisions that they made impacted other institutions. And so, as I did, we repositioned that boat, stayed the course, and we sailed on back to the land. And so I think that's what you're going to see specifically in this area, in this market, as we continue to put people over profits, understanding we're still for-profit growth business, but I don't see us being faced with too many obstacles that collectively we can't solve together.
You know, your analogy about the jet skis, I think is fitting for the next question, because that wave, the disruption, it has an effect on the people around you. When I think of financial institutions in Minnesota and in the Twin Cities, I think there's a level of resilience in banking, and specifically when it comes to community-based financial institutions, I think there's something special there. And I'm just wondering, David, we'll start with you. If there are any unique attributes that you think make being a community-based financial institution truly valuable and set you apart?
I think, as I alluded to, really prioritizing, investing, and empowering the potential of people, understanding that banking, traditional banking, hasn't been as inclusive. And so here's an approach to say, what can we do to bring equitable access outcomes, calling it what it is, but also looking at non-traditional ways to give people access to resources. You know, when we talk about this 3 years ago, it was always the moral case of why we should do this, right? But now we're seeing that it's a great business case. As we are all here, we know that our economy is volatile. I think the more people that we can get tied in, and I'm a gopher, so I'm going to use that analogy of rowing the boat, right? If we can get more people in the game, rowing the boat, having access to contribute, our economy benefits from it. So I think we've started to figure out the importance of meeting people where they're at, surrounding them with the resources and the support that they need, and just get the hell out the way and let them work a little bit, and then be there to support them along the way, but have that guidance so they can learn how to do it, but being that they're in a new space, be that coach, that mentor, that leader, And we're already seeing it. The other part of this that I must call out is there's still a huge disconnect in underserved communities with banks. And I think smaller community-based can be banks, excuse me, can be that trust ambassador, can be that one that wedge the trust gap and get community to not only understand what's out there as far as resources that are targeted towards them, but also get them to take advantage of it and know how to show up. You know, you can look back and the data shows you that, you know, again, it's a business case that we take this approach. And as and I'm a 16-year banker, I didn't say that. I just been with First Independence for 2 years, but in my life of banking, I saw that as if we really take the time to invest in people and really, when I say get them in the game, knowing the plays, and hold them accountable to being smart. We're seeing more stewards of banking. We're seeing more people trust the system, but we're also putting people on that path to financial freedom.
Yeah, I think about Minnesota, I don't know if many people know this, but in country, Minnesota has the 4th highest number of banks, so over 250 banks. And what that means is that those banks and all those communities, like Damon mentioned, can respond to those communities' needs. So we can go in, listen, learn. I think that's what, you know, in terms of unique attributes, what's unique about Minnesota. There's not a handful of banks making all the decisions in terms of lending or projects or whatever. It's a whole bunch of banks that understand their communities. And I think there's a ton of value in that diversity. And Damon mentioned it too, but the partnerships that banks can come together. Damon mentioned the banks that partnered with First Independence to bring them here. And then the partnerships that we can have with nonprofits and government to make a difference. I think that's really unique about Minnesota and how we see a problem and we come together. Groundbreak Initiative is a good example of that. McKnight Foundation came together. We see a problem with Black homeownership, Black entrepreneurship. How can we fix that? Let's bring everybody together. Let's brainstorm and let's put something in action.
Yeah, so I'd like to just piggyback on that. I mean, this is our time. So value-based banking, but if you're a value-based business, I really do believe in these choppy waters. This is our time. And so 3 very quick examples. So when I came to Spire as a CEO in 2010, we had this very, very long mission statement, 2 pages long. We had about 15 core values. We had all this stuff. All of a sudden I come along and we just kept things simple because we got a very simple-minded CEO. So everything's 2 words. So the mission statement aspires to improve lives, improve businesses. I mean, it's just improving people. Our core value is that we care. So we have to show people that value-based feeling has just been brought by our past. We have to show people we truly care and we need it. You know, life is about giving, not getting. We talk about that all the time. And then we added a core action that I believe is value-based. We added a core action that says simply giving back, because that's how we're going to be recognized. That's our value. That's our legacy at the end of the day. My other quick example is 2010, Spire lost $12 million. I came as a CEO. We were really on the brink of really some very significant concerns. I'll never forget, I said, well, let's double down on marketing. Let's tell people who we are. We have to tell the story. So I said to the marketing team, I said, you got 2 months, come up with a capital campaign. Let's go after this thing. They came back in 2 months and they laid this out. I was all excited about it. They said, Dan, here's what we want you to do. We want you to drive in this 1952 Ford pickup, and we want you to talk to people. And I said, that is the stupidest idea I've ever heard of in my life. I said, are you kidding me? I never drove a truck in my life. But the truck, it was that symbol of that added value. Show up, take care, dependable, gonna get you to point A, point B. It's not the Ferrari, it's not the Jaguar. We're the hardworking credit union, financial institution, just like my peers here. And so that symbolism of that truck is really value added. And then the last thing I just wanted to say too is that this is our time. And Spire actually, just like my peers here, we double down in marketing during tough times. So hopefully you see maybe some of us, but we say this is our time. This is when people are looking for stability. They're looking for an anchor. They're looking for people they can trust. They're looking for local, and that's exactly what us on this panel bring. And so when times are good, people are very comfortable with what they have. But when you're value-based and you truly believe in what you do, this is your time, and I truly believe that.
So with all of the, this turmoil in financial institutions, there's been a narrative emerging about a flight to quality. We saw a bit of a customer depositor carousel occur after some disruption in banking on financial institutions in mid-March. And a lot of the narrative said, this money was moving to the largest players, the largest institutions in the country, because there was this safety. there was this quality in that institution because to take a term that I think is too often used, they're too big to fail, but inevitably those dollars move there. And I'm wondering if there's a message that community-based financial organizations, institutions could lead with that would counter that and show that there is more quality, more safety, or equal safety and quality, not in those large players.
I guess, sorry, yeah, one thing people may not know is you can go out and research the bank you're at online. You can look them up and say, how are they doing? So that's one thing, that you can do as an individual on FDIC.gov. And the other thing I would say is, as a values-based bank, it's our role to provide that education. What surprised me during the Silicon Valley Bank collapse, well, first of all, depositors don't think of themselves as a lender, right? I mean, if you have your money at a bank, you don't think of yourself as loaning that money to the bank, but that's what you're doing in the bank's books. That's a liability. We owe you that money. But depositors don't think of themselves that way. That's why the FDIC insurance is there and everything. One thing I was surprised by in that we've done, I think, a better job is educating people about other tools to get yourself FDIC insurance above $250,000. So if you're a business and you have more than $250,000 at the bank, you might think, oh gosh, I'm exposed here if the bank fails, and it can fail quickly, as we saw with Silicon Valley Bank. So there are tools like IntraFi and others where you can go to the bank and you can say, hey, I want to have my FDIC insurance over $250,000. Can you help me with that? A lot of banks can. There's over 3,000 banks in that program. So you just have to ask that question. But I think that's the role banks like us can play, is really figuring out what's at the best interest of the customer.
Yeah, just quickly, I think, let's face it, SPP, B was unsettling to a lot of us. I mean, 48 hours, this thing fails. And it was significant bank. So I remember doing a lot of keynoting, and all of a sudden the whole discussion had on failures. I will tell you something, as we looked into that, there's reasons why that did it, and I won't go into that, but Minnesota credit unions, Minnesota community banks, value-based, are very safe and sound. And there was a flight at that point because people were concerned about risk and they were reading different narratives. I do feel that over time, we're starting to see that where now it's no longer the price point or the security. They are investigating. We're seeing a lot of that coming back. And we also saw a lot of new customer come our way once that they understood that $250,000 deposit insurance. Many high net worth individuals and businesses were spreading some of the deposit structures as well. So there was lots of opportunity there. But I do believe how we were in the past, so how we acted in 2020, 21, we had a bunch of sponsorships like on the Ordway, and they didn't do any performances in 2020, but we said we're going to step up and still pay our sponsorship. So it's those kind of things when you give back and you truly are doing it for the right reasons, those will help the narrative with what happened with the SPV. And I think over time we will gain that traction again.
And I'll just build on briefly what the gentleman just said. One, it just gives us an opportunity for the consumer to educate themselves, right? And understanding what options are out there to secure your deposits up to and beyond 250,000. And it also has created an opportunity for us to go on a roadshow, to not just speak to the stability of the banking sector, but in particularly for First Independence being a new bank to this market, tell our story, tell our 53-year now story in regards to how we run business, how we protect our customers, and really ensure that the bank is operating in a way where we're poised to take any types of waves or hits. And I think the other part of it is just that, I would say we're too small to fail, touche, right? So, just understanding that there is perception is reality, right? And I've worked for larger firms as well. So, fortunately, larger firms reap the benefits of that false narrative. But I think the more people understand banking, understand their options to protect their assets, and then in this case, understand how smaller or minority deposit institutions do business, there's a sense of security. I'll give you a statistic. For the minority deposit institutions, 90% of the depositors are up to 250,000. So there's really no risk there. And unlike my colleague Brian here, our larger investors, they're actually saying, so if I put this deposit there, many mortgages are you gonna do? So they're actually understanding the banking 101, saying, well, you know what, this is creating an opportunity for us to lend. And so given the historic fabric of why we're here and what we're trying to get accomplished, I think it's a point of pride where people have said, you know, even though there's this fear, now it may take me a while, the relationships take time, right? But as I get there, I understand what are some of the other Intrify and some of these other resources out there to protect our assets, but I want to be a part of something larger in impacting community and building equitable access to community. So guess what? I'm in.
I love that. I'm getting a little bit of a cue that we're nearing the end of our time, and so rather than have the music play us off, we're just going to kind of move to the end. And I'm going to pose the final question to you, and kind of tying a little bit of what we've talked about, this uncertainty in the economy or the macro headwinds, if you will. You know, Dan, you referenced the interest rate increases, 500 basis points in 14 months. If you would have asked me 14 months ago, it was going to be 500 basis points. I don't know if I would have said that. I would have said it would have been a lot, but maybe not 500. And so there is this uncertainty in thinking about our topic of value-based banking in the current macro environment. What is that role that you all are playing to continue activity on the ground moving forward in your communities with those underserved, maybe even unbanked or underbanked populations? Well, in there.
I'll start. So with us, one is about education. And so we are really doubling down on financial wellness. And that wellness is a big umbrella because that creates financial freedom. So within that, there's behaviors that we're helping consumers establish or perfect in regards to taking advantage of what we call this generational wealth path. And specifically, it's the when you think of underbanked or unbanked communities, a lot of it is a lack of knowledge. And that's where people opt out because they didn't understand and they got themselves into a position or situation. And they felt like, you know what, I'm just gonna opt out of that and go and use alternative ways of banking. So one, that knowledge, meeting people where they're at, give them the education, helping them become stewards of banking. I think the other thing is home ownership. You know, we still here in Minnesota have the worst home owner discrepancy in the nation when you compare white households to black households. I'll give you statistics, because I know I got some scholars in the room. 70% of white households own their home. Here in the Twin Cities, we're talking, you know, maybe 25%. And so when we talk about closing the wealth gap, when we're talking about putting people on the path for financial freedom, these are things that we have to tackle. And then the last pillar I'll say is small businesses. As Mayor Fry alluded to and informed, you know, we have a huge increase of minority and brown and black businesses coming into the sector. How do we support that? And how do we surround them with the resources so when we look at them 5 years, they're still here, that sustainability thing. So I think really those three pillars, because what we found in the data, that if people are taking advantage or put in a position where they can take advantage of those three, that's a direct path towards wealth building assets, and you can pass those down to the folks that come after you.
So Sunrise is a community development financial institution, which is designated by the U.S. Treasury. And what that means is we lend 60% of our loans into low and moderate income communities. Simple as that. So those of you in healthcare and other industries know that it's extremely difficult to be innovative in a highly regulated environment. Banking is that. You have very strict standards you have to adhere to. So I think the role of values-based institutions like ours is to try to innovate and lead in that space. So how are we going to partner with the nonprofits, like I mentioned before? How are we going to partner with each other to make a difference? And leading and being innovative, while it's difficult, if you have that at the top from a leadership standpoint, we do, and I know these institutions do, you can try things and maybe you fail. You can try things and maybe succeed. It's a model to grow from other aspects.
I'll just say three very quick things. Number value-based, banking, value-based business that you have. We always use the word high touch, high tech. So we lean into high touch. High touch is costs a lot of money. We have branches, we have call centers, we have people that will talk to you if you want to talk. We believe in high touch. That's a value-based that we have to lean in. But we also know we need technology. If you talk about AI and all the disruptions that we're definitely going to have in technology, but we have to remain committed at high touch. And number two, I talk about that, life is about giving, not getting. We talk about that every day. Every staff member at Spire is involved in the decision of where to give, how to improve our communities day in and day out. We're not doing it for PR, we're doing it because that's what we are, and that's how we behave. Thirdly, I would just say at Spire, we put everything through a filter of SID, strategic, intentional, and discipline. But I wanted to leave it with that last word, discipline. You have to stay disciplined to your approach. And as we continue to grow, we've had a number of mergers. You have to stay disciplined of who you are. And anytime I come in front of my board about a merger, or I talk to them about a growth opportunity, are we going to stay true to who we are, that high touch, high tech? And there's also, it's always tempting to move into a different arena, but I would just say that you have to stay true to what your mission is all about.
Dan, Brian, Damon, I appreciate your time this morning, sharing insights. If you're hanging around, I encourage you all to seek them out and find them, talk to them more, because they have some unique and very exciting stories to share that we didn't have time to get to. But I'm Brandon Coase with RSM. Thank you all for listening, and enjoy the rest of the morning.